Well, look, I think China's not going to be the biggest source of global growth in the months ahead. I think reality is that this 5% growth target we saw at the MPC seems realistic. We've been forecasting 5.3% for some time, and that is still our view. And look, I don't think we're going to see huge build-up in leverage in China, but credit growth is going to start to pick up. We'll see front-loading of special bond issuance, and I think that will weigh on bonds still, so we're not particularly positive on duration in China. Equities, in a sense, will probably continue to get inflows, but in the near term, with all the risks around, I think it hurts EM in general. And from a point of view, even though EM is not, emerging markets are not at the epicenter of this, and China's not, it may even act as a hedge to some extent, because China can be isolated, and you may see some funds going there. But the reality is that as risk aversion picks up, generally equities and certainly emerging market equities suffer, and you see capital outflows coming through because of that. So the near-term prospects, until a lot of this financial stability situation is resolved, it's unlikely that China flows are going to benefit, and then for China equities. Although historically there has been a decorrelation between China equities and the rest of the world, so it could be a hedge.
Yeah, and just in terms of that, because you mentioned something specifically in terms of, you know, the near-term expectations of EM outperformance, perhaps you should be a little bit tempered when you're thinking of it from that perspective. But in, you know, I suppose a little bit of a longer duration horizon, if we were to talk about, say, the next 3 to 5 years in your mind, do you think that, because this is something that always comes up, do you think that EMs are going to outperform the United States? Because that would obviously then influence where a lot of the money is going to end up going. Yeah,
look, I think EM has underperformed in the past couple of years pretty significantly. Last year was a pretty abysmal year. And if we look at growth prospects, and I wouldn't say all EM, you've got to be quite selective, but I think we will see emerging markets perform pretty strongly in the years ahead. And I think even this year, once we get through this shock, and our assumption is the dollar continues to weaken, US Treasury yields weaken this year, we're forecasting a move, potentially below 3% on 10-year Treasuries. If we see that all happening, that bodes well for EM currencies. Emerging market local bonds will benefit, and we'll see a return of inflow. And then you've got the growth story. That's countries like India, Indonesia in this region that domestically are doing well, that cannot worry so much about weakness in external trade. Then you've got high-yielding EMs such as Brazil, Mexico, etc. So I think emerging markets will do well from not just a medium, but even a longer-term perspective. There's a lot of infrastructure investment money that's going to be piling into emerging markets. We were just in India recently. We took a bunch of investors there, and the story on the ground was very constructive.